All right, so get this. More than half of Americans think the economy is in a recession. Because of inflation and the cost of living, hardworking Americans are feeling financially squeezed month in and month out. It's no wonder they're becoming more and more concerned about their retirement savings and even their ability to enjoy a secure retirement, right? Well, hey, I'm MJ, and today we're uncovering 3 ways you could potentially protect your retirement savings from a grueling recession like we saw in 2008. We've got some great strategies for you to consider that can help you protect everything you've worked so hard for. So let's dive in and get started. The stock market bull run of the past few years has created more than a few 401k millionaires. But with economic headwinds increasing, many investors are getting nervous about just how long they'll remain 401k millionaires. Investors who have made lots of money in recent years are aware that a stock market crash could wipe out their wealth just as easily as the bull market grew their wealth. And many of those who remember 2008 are worried that the next crisis could be just as bad as 2008 or even worse. The financial crisis saw many people lose significant portions of their savings and investments they had worked years or even decades to build up. Some lost over half their savings as markets plummeted as a result of the financial crisis. Those investors don't want to see a repeat of 2008. I don't think anyone does. And they want to do anything they can to avoid making the same mistakes. But with so many investment options out there, what's the best way for investors to protect their 401k assets from losing value in the coming years? Here are 3 potential strategies to think about when it comes to protecting your 401k assets. Market timing is notoriously difficult, and in many cases, picking both the top and bottom of a market cycle has more to do with luck than skill. That's why reducing your exposure to volatility can be helpful. Many investors start seeing stocks decline and they think that they'll recover. Only when it's abundantly clear that markets are in a nosedive do they finally accept the reality that their stock investments will not recover. And then they make the mistake of selling at the bottom, locking in losses, and missing out on the gains that occur from a rebound. The temptation to wring every last penny of gains is a great one, but sometimes you have to know when to minimize your risk and your exposure to volatile financial markets. By diversifying your portfolio with gold, you can ensure that your assets are not completely at the mercy of Wall Street for their performance. If financial markets take a downturn, if bond markets become illiquid, if stock markets crash, those traditional investment assets may all perform poorly. Physical precious metals could potentially act as a hedge against dips in volatile markets. The boom and bust of the business cycle is all but a certainty, with stock market crashes and recessions occurring with unfortunate regularity. Unlike paper assets like stocks and bonds that can become worthless as the companies that issue them fail, gold and silver have always been worth something and have remained in demand for thousands of years. One way to potentially reduce your risk exposure is to diversify your portfolio so that you're not overexposed to one particular company, sector, or region. In other words, don't put all your eggs in one basket. For many people, this has traditionally meant that they invest in a mixture of stocks and bonds, and when stocks and bonds are booming, they increase their holdings of stocks, and when stocks decline, they increase their holdings of bonds. But what happens when both stocks and bonds decline? We saw that most recently in 2022 as both stock markets and bond markets saw large declines. With the performance of financial markets being highly dependent today on what the Federal Reserve ends up doing with regard to monetary policy, investment decisions might have to take that into account. And with the Fed now having to decide between cutting rates or keeping them elevated for longer, no one really knows how markets are going to react or perform over the next few months, let alone the next few years. That uncertainty about the future is alarming to many Americans, and understandably so. And that's why so many people are starting to diversify their portfolios with gold. Gold has a long history as a safe haven asset and a store of value, as well as a reputation for maintaining value through both good times and bad. Many people rode out the 2008 crisis watching their 401k balances plummet, all the while watching gold rise in value. Even in the aftermath of the 2008 crisis, gold continued to grow, setting all-time highs in 2011. After seeing that performance, many people likely vowed that the next time around they would invest in gold to protect their assets. That's probably why so many people have turned to transferring a portion of their 401ks to a gold IRA. It only makes sense, right? They've seen this playbook before, okay? If you have a 401k from a previous employer that is sitting idle, or if your current 401k options don't leave you enthused, a 401k to IRA rollover could offer you more investment options to put your money to better use. With a gold IRA, you can roll over or transfer assets from existing 401k, 403b, TSP, IRA, or similar accounts into gold tax-free, allowing you to protect your current retirement savings while still benefiting from the same tax protections that you would enjoy with any conventional IRA. That can help you protect your assets without having to worry about taking a huge loss from markets plummeting or a huge tax hit. With a rollover IRA, investors can use existing retirement funds to take advantage of a broader range of investments than are available through 401k investments alone. And by investing in a self-directed IRA, you have even more options for investments, such as a gold IRA. Rollover IRAs are most often created when changing jobs or retiring, as they allow employees to move their current 401k or other retirement account balances into an IRA account that will offer a better array of investments and potentially superior performance. When performing an IRA rollover, funds from existing tax-advantaged accounts can be rolled over into a new IRA tax-free. You can even roll over funds from multiple retirement accounts into a single self-directed IRA, making it easier for you to consolidate and manage your retirement savings. With a gold IRA rollover, investors can minimize the tax impact of their gold assets as well, since distributions are normally subject to ordinary income tax rates. If you're worried about a potential recession and you want to protect your 401k assets, now is the time to start thinking about that protection. Waiting too long puts you at risk of losing significant amounts of money when the recession finally hits. Don't leave your retirement savings at risk. Make the first move to start protecting your assets today before it's too late. By setting up a self-directed gold IRA, you can rest easy knowing your assets are more diversified and protected with gold. Diversifying your portfolio with gold can be a great way to protect your hard-earned retirement savings from market fluctuations and economic crises. There's no better time than today to start thinking about buying gold. With the economy facing its fair share of difficulties, a gold IRA may be just what you need to help you protect your assets. Setting up a self-directed gold IRA can be done easily, especially when you work with one of Goldco's precious metals experts. Whether you want to learn more about gold IRAs, start the gold IRA rollover process, or just buy gold coins, Goldco can help you protect your retirement savings with gold. No matter your age or stage in life, Goldco has precious metals options for everyone. They can connect you with experienced representatives who can answer your questions, offer valuable reference materials, and help you navigate the gold purchase process. Goldco is ready to help you facilitate the diversification of your retirement portfolio so you can feel more in control of your financial future. So, what do you think? Are you ready to diversify and help protect your retirement savings with gold and silver? If you'd like to talk to a Goldco representative about any questions or interest you may have, use the phone number in the description below. Also, you can get a copy of Goldco's Wealth Protection Kit to learn more about diversifying and protecting your savings with a gold IRA. That link is also in the description below. If you'd like more videos about gold and silver, go ahead and click here. And don't forget to have a great day. I'm MJ, and I'll see you next time.